Before there were banks, before there were coins, before there was even the concept of owing someone something, humans still had to figure out how to get what they needed. And what they came up with was stranger, darker, and more brilliant than anything you learned in school. From barter to debt, from clay tablets to coins, from paper money to the world's first financial collapse. This is the story of how money was invented and how it's been quietly running your life for 10,000 years.
Imagine you're a hunter 10,000 years ago. You just killed a deer. It's more meat than you can eat before it rots. Your neighbor has grain. You have meat. Simple trade, right? Except your neighbor doesn't want meat today. He wants it next Tuesday. But meat doesn't last until Tuesday. This is the problem that broke early human societies, and solving it is what invented money. Economists call this the double coincidence of wants. Both people have to want what the other has at exactly the same time. For small tribes, it worked. For growing civilizations, it collapsed. The oldest financial system ever discovered wasn't coins. It wasn't gold. It was debt. Archaeologists digging in ancient Mesopotamia, modern-day Iraq, found clay tablets dating back to 3000 BC. These tablets weren't love letters. They weren't laws. They were IOUs. I owe you 5 units of grain to be repaid at harvest. This was the first bank statement in human history, and it predates coins by over 1,500 years. The Sumerians didn't invent writing to tell stories. They invented it to track who owed what to whom. Money didn't create civilization, debt did. Here's where it gets strange. The first banks in human history weren't run by merchants or kings. They were run by priests. In ancient Mesopotamia and Egypt, the temple was the financial center of the entire economy. Farmers would deposit grain into the temple storehouse before harvest season. The priests would issue receipts, essentially the world's first paper money. Those receipts could be traded for other goods across the city. The temple charged interest on loans. Yes, the first interest rates in history were set by priests, not bankers. In ancient Babylon, the Code of Hammurabi, written around 1750 BC, actually capped interest rates. Grain loans maxed out at 33% per year, silver loans at 20%. They had predatory lending laws 4,000 years ago. Now here's the dark part. What happened to people who couldn't pay their debts in ancient civilization? In ancient Mesopotamia, debt slavery was legal and common. If you couldn't repay, you or your family members could be claimed as property by your creditor. You would work off the debt with your body. Ancient Sumerian records show entire families, fathers, mothers, children, handed over to temples and wealthy merchants because the harvest failed. But here's the twist most people don't know. It wasn't permanent. Mesopotamian law limited debt slavery to 3 years. After 3 years, you were free, regardless of what you still owed. And periodically, kings would issue a clean slate decree, canceling all private debts across the kingdom at once. The last recorded clean slate decree was issued by a Babylonian king in 1400 BC. Economists today still debate whether something like it could work in the modern world. For thousands of years, debt tablets and grain receipts ran the world's economies. Then around 600 BC, something happened that changed everything. The Lydians, in what is now Western Turkey, minted the first coins. These weren't government-issued currency as we know it. They were lumps of electrum, a natural alloy of gold and silver, stamped with a lion's head to certify their weight. For the first time in history, you could carry value in your pocket. You didn't need a clay tablet. You didn't need a priest to issue a receipt. You had a coin. Within 200 years, coins spread across Greece, Persia, India, and China simultaneously. 4 separate civilizations all invented coins independently within roughly the same century. Historians still debate why. The leading theory: armies. Coins were invented to pay soldiers. A king needed to feed 10,000 men. Grain tablets were too slow. Coins were portable, divisible, and universally recognized. Rome took coinage and built an empire on it. At its peak, the Roman economy was so sophisticated, it had stock markets, insurance contracts, real estate speculation, and consumer credit. Roman bankers called argentarii operated from dedicated benches. The word bank comes from the Italian banco, meaning bench. But Rome also produced the ancient world's first financial crisis. In 33 AD, yes, 33 AD, the Roman Empire nearly collapsed financially. Too much money had been lent against land that was overvalued. Sound familiar? When the Emperor Tiberius tried to tighten lending rules, credit froze. Nobody could repay. Estates were liquidated across Italy at fire sale prices. The Roman Senate was forced to inject 100 million sesterces of emergency cash directly into the banking system. The world's first government financial bailout happened 2,000 years ago. While Rome was bailing out its banks, China was taking a completely different approach to money. The Tang dynasty, around 800 AD, invented paper money. Not receipts, not debt tablets. Actual government-issued paper currency called jiaozi. The idea started with merchants who were tired of carrying heavy copper coins on long trade routes. They'd deposit their coins with trusted merchants in the capital and receive a paper certificate they could redeem anywhere along the Silk Road. The government saw it, liked it, and took over. For 200 years it worked brilliantly. Then the Song dynasty printed too much of it. Inflation destroyed the currency's value. People refused to accept it. The paper money system collapsed, the world's first hyperinflation, in 13th century China, 700 years before the Weimar Republic made it famous. So what did ancient humans do with money? They invented debt before coins. They let priests run their banks. They passed consumer protection laws 4,000 years ago. They had financial crises, government bailouts, hyperinflation, and debt forgiveness. Every single problem we think of as modern was already being solved, badly, by people who had been farming for less than 1,000 years. The oldest financial lesson in human history is this: every time a civilization got money right, it expanded. Every time it got money wrong, it collapsed. That pattern has never changed. Not once in 10,000 years. If you're watching this and thinking, wait, that sounds exactly like today, you're paying attention. If this changed how you think about money, subscribe to Curious Black. Every week, we go back in time to find the things that explain right now. The next video is going to make you question something you believe about work, wealth, and why you wake up every morning and trade your time for money.